let's talk about silver market update in the afternoon today. So silver market update. On Tuesday, the silver market saw a brief pullback before quickly rebounding, demonstrating strong price market resilience. The market remained choppy, with traders struggling to find direction as significant noise within the price range makes it difficult to establish a clear trend. Notably, silver has shown a resistance to deeper corrections, holding steady without any prolonged sell-offs, while its industrial demand may exert some downward pressure. The 50-day moving average around $31.55 serves as a key support level. If silver breaks above $33.33, it could pave the way for a move toward the critical $35 mark, which represents a recent cycle high. Looking at the long-term chart, silver remains in an overall uptrend, though marked by volatility. The ongoing weakness of the US dollar continues to support silver prices, and the rising trading volume suggests that the market is attempting to break past previous high. At this point, I'm not considering shorting silver as long as prices stay above $31. However, if this support level is breached, I would need to reassess the medium to long term outlook. Now let's talk about gold. So, yesterday's surge in spot gold was largely driven by political developments in Europe. The German Green Party coalition leaders' approval of a defense spending agreement boosted confidence in the euro, causing the US dollar to weaken further. This in turn created room for gold, which is priced in USD to rally. While geopolitical tensions and trade war risks are still looming, they were not the main drivers of gold move on Tuesday. Instead of the weaker dollar triggered a domino effect that lifted gold prices. On the daily chart, gold has regained all of its early week losses, but there is not enough momentum yet to challenge historical resistance level. If gold holds above 2910, it could be attempt to test 2933 resistance level, which makes aligns with the last week's high. On the downside, $2880 support level has remained intact for the past 2 days. If it breaks, the next key support level to watch are $2873, which serves as the support 1, and 2857, which is the support 2 and aligns with the March 3rd low. Gold continues to benefit from the safe haven demand and expectation of a Federal Reserve rate cut. However, upcoming inflation data will be the key short-term driver. If CPI data shows cooling inflation, expectation for the Fed rate cuts will strengthen, pushing gold higher. On the other hand, if inflation comes in higher than expected, it could drive up bond yields up, putting pressure on gold. From a technical standpoint, gold is currently trading between two pivots level, which is 2910 and 2895. Price action suggests investors' indecision, signaling that a breakout is imminent. Move above 2930 would confirm a bullish breakout, potentially setting up a test of the all-time high at 2956. However, if buyer fails to sustain the rally, a pullback could occur with key support level at 2864 and 2841. The 50-day moving average at 2811 remains a critical trend indicator, supporting gold's long-term uptrend since January 8. For now, the outlook leans bullish unless inflation forces the Fed to keep monetary policy tight. Traders should closely monitor CPI and PPI data, as well as any shifts in the rate expectation to anticipate gold's next major move. Now let's talk about US inflation outlook. The latest inflation figures show that headline CPI on a yearly basis stands at 2.87%, while the monthly figure is at 0.27%. Core CPI has recorded an annual rate of 3.21% with a monthly increase of 0.29%. We expect February's core CPI to come in at 0.29% on a monthly basis, bringing the annual rate to 3.21%. The headline CPI is likely to be 0.27 and 2.87% on a yearly basis, largely due to the 0.2% rise in both food and energy prices. This protection aligns with the 0.32% rise in core service prices, excluding rent and owner's equivalent rent, as well as 0.25% in the core PCE price index for the February. There are three key trends to watch in this CPI report. First, Used car prices may increase by 0.6%, driven by higher auction prices, while new car prices are expected to rise only 0.3% due to the weaker dealer discounts. Second, auto insurance costs could jump by 1%, adding upward pressure to inflation. Third, seasonal factors may push telecom costs higher by 0.3%, while airfare could see a 2.5% increase. While Trump's tariff policies could slow the disinflation process, factors such as rebalancing in the auto market, adjustment in the rental housing sector, and shifts in the labor market should keep inflation continue to ease over the next year. Thank you.